Hey everyone, today I want to talk about Energy Transfer LP, which is a pipeline company that pays a pretty hefty dividend. And I want to show you how you can essentially collect rents, monthly rents, from Energy Transfer in a roundabout way using options and without risking a whole lot of capital. So what is Energy Transfer? What do they do? So they own and operate pipelines. So I believe primarily natural gas and liquid natural gas pipelines. This is their website. You can see they have some energy kind of transfer services. They've got pipelines, so they've got gathering, processing, transportation, and storage. That's how they break up their business. It says they've got approximately 14,000 miles of natural gas. So I guess they do have crude oil pipelines as well. And they've got 15 major processing plants. I don't know exactly what they do at those processing plants, but they are in the energy sector. Right here's a map of different pipelines. Looks like they operate heavily in, Oklahoma, Arkansas, Louisiana, and Texas. They've got different pipelines. Looks like they've got a little bit in North Dakota they're signaling here. And so this is a pretty steady, pretty stable business because energy is always needed, as we're finding out more and more with the Ukraine war, how important it is for energy to get different places. And this is an industry that really functions like a utility. I mean, we're not going to stop needing natural gas or oil anytime soon, and it has to get from A to B, and this is what Energy Transfer does. And so it's a pretty lucrative business. I believe in this business, the rates are kind of set by regulators, so you have a pretty good consistent return on capital. The regulators let you set pricing to get a good return on your capital. Now, this is one of my favorite websites. I mention it a lot on my channel. Encourage you to sign up for Finbox. I have a link in the description below if you're interested. And you can sign up. I think plans start at, if you want to go month to month at $19 a month. And then if you pay for a full year, it's even cheaper than that on a per month basis. But this will help you value different companies and see, what a reasonable value is for the company. Here, this Finbox is saying that $15 is a good fair value. They have a medium uncertainty rating. It goes low, medium, high. I think there is actually very high as well. So you can see here different models that this website is considering. So it's kind of computed number crunching with different valuation models. Actually weight this 10-year DCF. Sorry, no, not that one. The growth exit, either the 5-year or the 10-year the most, and that's $16. So this $15 valuation seems reasonable to me. And they actually pay a 20 cent per share dividend per quarter, so that's 80 cents a year, which I think comes out to be over 7% dividend yield. Actually, I can show you here. Yeah, so the dividend is 7.46% at today's prices. So it's a nice, good dividend, which provides some downside protection on the shares. You can see if I go over a 1-year chart here, you can see it's been in a range over the last year, anywhere from about $8 all the way up to about $12, and right now it's sitting at about $10.72. So when I do this, what I call the options rental income system, so ORIS is the acronym. It's kind of just what I call it. I'm looking for stocks that are not going, I don't care if they're, I don't necessarily care or even want them to go sky high. I just want stable price. And that's where you make the most money with the strategy. You're essentially renting out your upside in the stock and on a monthly basis and just collecting that rent month after month. And it's been pretty good, especially in the current market environment. I don't think we're really looking for home runs. We're just looking for singles and doubles. And so let me show you this strategy really quick. Now that we've found a stock that we like, that's you also want to find one with liquid options, which Energy Transfer does, and weekly options preferably. So it meets those two criteria. It meets the valuation criteria. So we've got those three criteria met. And then let me show you what I'm doing. So I'll pop this on the profit loss chart here in Thinkorswim. Let's see if I can zoom in a little bit here. So as you can see, the current price is at this dotted yellow line, 1077. What I did was I went out and I bought a very long dated option, the January 2024 $5 option. Now if I look at the option chain, if I go down to 2024, you can see I'm buying this $5 strike call option, and it really only has like $5 to $10 of extrinsic value. That essentially just means that you're not paying a whole lot extra for it versus buying 100 shares. So you could also alternatively just buy 100 shares to do this strategy. Now 100 shares though would cost me $1,072 at the current price, but I could buy this option for around, these spreads are a little bit skewed because the market's closed right now, but you could buy that around 570, I think, when I was looking at it today, 575 maybe. And then, so yeah, it'd actually be 575, 580-ish, because it's got to be a little bit, yeah. Won't go into detail there, but yeah, it's about 580, right? 580 bucks. So you don't need to shell out 1,072. Although if you have a margin account, it's only going to eat up about $400 to $500 of buying power. So if you wanted to buy the shares, then go ahead. I like to buy the leap option for a couple reasons. It actually has more downside protection than 100 shares, just the way the options work. Won't get into detail in this video, but I'm selling, so I'm buying that $5 January 2024 call option, so it doesn't expire for a very long time, a year and a half, and I'm selling this option that expires in 37 days, the $11 call option, and I'm collecting 532, or sorry, I'm not collecting, I'm spending 532 bucks net, right? So I paid 580 for the long duration asset essentially, which is the $5 call, and then I am selling, which is rent, I'm collecting this $11 call option for probably about 45, 46 bucks, right? And that will, if I did that, then my profit potential, if it's above $11 a share, I would make 68 bucks in the next 37 days, which ain't bad off of a $532 investment, right? And my break even, I'd actually still be profitable all the way down to $10.30. So it still could go down a bit and I would still be profitable. You know, it's a little bit less than 5% downside protection. And then what I often do when it's a market that's uncertain and maybe I want to protect my downside or lower this break even, or won't necessarily lower the break even, but we'll make it so that if the stock gets down here in this range, you know, goes down further, like a 10% drop or a 15% drop, I'm not losing that much. So I could go ahead and buy some protection for 17 bucks. By buying this $10 and $9 put spread. So I'm buying the January or the July 22nd $10 put, selling the July 22nd $9 put for a net of $17. Okay, and what that's going to do is you can see that that will cause me to have downside protection. The most I'll lose below $10 a share, all the way until about $9 a share. You know, I flatten out my losses here. I'll lose a max of about 49, 50 bucks. Okay. And then even, you know, let's say it got down to $8 a share. My max loss is about 150 bucks. Okay. Which I don't think, I don't think is high likelihood that it would get down that far. If you look at the chart, let me just zoom in here. So if you look at the chart here, in the last year, the low was about $8, right? And at that price, we'd lose 150 bucks. I said at $9, which is down here, this price level here, if I can do this, approximately $9. This blue line here that I just stuck in, even if it got down to there in the next 37 days, we'd only lose 50 bucks because of that hedge, right? Now, if we do put the hedge on, though, it reduces our max profit to $51. Okay. And if the price stayed the same as it is today, we'd make about 30 bucks. Now, the cool thing is, if the price is, you know, around where it is now, even if it goes up, you can do another one of these. You sell approximately an at the money or close to at the money call option again, another 30 days or so out, and you'd probably collect another anywhere from, you know, 30, 40, 50, possibly even $60 that following month. Okay. So it's not bad to be able to collect close to 10%. You know, even if you collected 5% a month on this stock, that's pretty good. You know, what an extra 50 bucks in your pocket every month, or, you know, even extra 25 bucks in your pocket every month from this money that is maybe just sitting in a savings account and you're doing this strategy instead. It's not too shabby. So that's just an example of this option rental income strategy. And actually have a online course. This first cohort is going to be live. And then we also have a Discord that you can join. So there's a link in the description below where you can get at least, we'll put out at least one idea a month. So if you can become a gold member, and on that Discord we'll post, or so not a month, per week, we'll post at least one of these trade ideas a month or week. I keep saying, I don't know why I keep saying month. So every week you can see a new idea. You know, you don't have to act on any of those. Those are just ideas that I spot in the market. And it's really for educational purposes, right? To teach you how to do this on your own. We also post once a month a watch list of stocks that I screen. I have some screening that I do for stocks that meet the criteria for this system or this strategy, right? They've got to be liquid options. They've got to be weekly options, undervalued, things like that. And so that list can also help you find your own ideas. It's kind of like a good starting point. And you can look at charts and all that and find stocks that look like they're at a good place to start doing this. So if you enjoyed this video, please like and subscribe. Trying to grow this channel as well. Just even if you don't join the Discord, you know, I just hopefully this provides some value to you. I only want to create things that provide real value to people, and I honestly believe that this is a kind of a good side hustle, side income for people if they learn to do this strategy without taking an insane amount of risk. Right, it kind of has some risk mitigation built into it. So anyway, hope you enjoyed this, and I will see you next time.